Asia, it's not a single homogeneous market. Asia has many countries that are at different stages of their growth in the SRI or responsible investing maturity. So you have on one hand Japan, which is quite mature in terms of the stock markets, has been, you can't even call it an emerging market, it's a developed market. But then you have countries like South Korea, China, Singapore, India that have been picking up recently in the last few decades. So it's very difficult to generalize, but you can say that SRI is growing in Asia, especially if you exclude Japan. South Korea is pretty progressive. Singapore is now starting to join. India has a very good history since many decades ago of very progressive strategies, but only with a handful of companies which were family owned. So now it is becoming mainstream. So Asia is growing very fast. It is expected that eventually most companies in most countries will pick this up across Asia, but it's a trend that is just beginning and is at different stages. The practices differ very vastly across different countries. That's the point I'm building, that there is a different countries are at different levels in the curve of maturity. So some countries it's very institutionalized now to respond to shareholders, to hold organized AGMs, to have proper reporting standards, whereas in other countries it is just starting. Mostly the asset classes that are tracked are usually equities. There is very little focus at this moment on sustainability in fixed income securities. Every market is unique, and in that sense, Asia region, the common characteristic of all Asian region countries is that they are growing very fast now. So it's a race. They're almost in a race to kind of outgrow each other. They're very competitive, most of Asian countries, and when I say all that, I'm excluding Japan, because Japan is probably quite ahead. You can't even call it a developing country. The way Asian markets differ generally from European and US markets is that there is very little information available on companies. Even the financial reports are not complete at this moment. Companies are starting to understand the importance of financial reporting. So you can imagine that sustainability reporting is very far away to be happening at a mass level. So they are starting to pick up. So getting information is a big problem for investors right now. Getting the right amount of information is another problem. And then the third level is, can you trust the information that you have received? So it is important to understand that we need to do a lot more work to find out relevant information in Asia and in other emerging markets like Latin America or Middle East or Africa, because you cannot take the information for granted. You cannot take what the company is giving you for granted. Either the data is usually, even the companies do not understand what they're expected to report, because for them it's a new phenomena. So the approaches that will work, the second part of your question, the approaches that will work would be to do a lot of audit for that data, which is really what we have started doing. We started 4 years ago, and we realized that the data that you have is not dependable and it's not comparable. Leave alone across countries, it's not comparable within the same country. So what we had to do, we had to do a lot of audit, we had to do benchmarking, we had to do comparison, and then we were able to reach a dependable level of data. And once you have that, then you need to do checks in the market, you need to do stakeholder analysis, which is what we do quite a bit. We talk to all the suppliers, customers, non-customers, on why they are not buying from the company. We talk to competition, we work to regulatory bodies, NGOs, communities where the companies operate. So all that is very important. So which really means that in Europe or in US, you can rate a company in just about 2 days, which is very easy. But in emerging markets, and especially in the Asian emerging markets, you need to do a lot of rigorous in-depth assessments, which could take somewhere between 1 week to 2 weeks to 3 weeks, depending on what you are looking for. In China, it could take longer because information is not easily available in China. But in other countries, it's possible to do it relatively easy than China. There is no Asian standard as such that seems to be evolving. There are country by country approaches that are being discussed. Obviously, the key factor for progress in this direction would be the exchanges in each country. So wherever there are exchanges that are progressive, the stock exchanges, wherever they are progressive, there are things happening. For example, in South Africa, there is an example that in order to get listed on the exchange, you have to have a certain level of ESG reporting, which is very rare to see in Asia right now. But I think there are some signs that some countries will adopt that in Asia, and I think that's the way to go. So if we can work with in that direction, it's possible to make a large impact soon. The important aspect is why should we care for Asia? Basically, it's an opaque market. The standards are not very developed. Then why is it worth doing all the hard work? It's important because as it is at its early stage of growth, Asia is delivering phenomenal returns. Despite the fact that we have a lot of uncertainty elsewhere in the world, there are companies in Asia where in the last 15 years, I'm talking about large cap firms. Maybe the number top 5 in an index that have given 30 times returns in just 15 years. And I'm talking large cap. Then you can imagine the amount of return that is available at the mid cap, small cap, and unlisted firms. So there is a huge amount of opportunity that is available for people who can go in early, who can invest that time and effort in doing this assessment. And once it is done, invest, but also invest for the long run. What is very important is to invest in the right stocks. It's very counterproductive if international investors go to Asian markets or other emerging markets and feed asset bubbles, which has happened in several cases. As we can see, there was a currency crisis not too far ago in 1987 in various Asian economies because there were some asset bubbles that were fed. Recently, there was a microfinance crisis in India last year. Because too much money was going, including venture capital money, into microfinance. So what we need to do is we need to do a very careful amount of research and then go into the market and select the right stocks, because then the amount of rewards that are available can be significant. But if we don't do that amount of research and we just go for a trend, a sector trend or a theme trend, then it's possible that it could backfire.